Cheers. Welcome to the Happy Hour Money Podcast. And so for the first time, I think all guests have their beverage. So this actually works really well. It also helps that we're not recording an early morning podcast. So that helps too. But we are joined today from Michael Iseman, who is the Director of Operations for Acre Trader. And so we're going to talk about farmland. And as someone on our team that gets some slack at times for growing up on an Indiana farm, this one is one that I've been looking forward to. It's great. I've known Mike for a little while, and it's exciting to have him on the show. But Mike, thanks so much for carving out some time and drinking a beer and talking about farmland.
Yeah, cheers. I'm happy to be here. It's good to hang out. I think it was maybe 3 years ago that we first connected, which was relatively early in the Acre Trader story, and got to meet you in person at the Land Investment Summit that we hosted here in Arkansas last year. So I'm happy to be here and always excited to talk about farmland.
Yeah. So on the way to go in and grabbing a beer, I called my parents because like, hey, my dad used to farm. He does not anymore. He got out probably when I was 13 or 14. I was like, how many acres did you guys farm? He's like, well, he asked a qualifier, like the whole family or just me. And so I was like, no, I just need a number. So at the time, at the peak, because that's what I was trying to get to. So it's 800 acres, all row crops. And we'll talk a little bit about like what are row crops here in a second. And then family. So him, his dad, and his brother, they did about 2,000. So up in Northeast Indiana, that's where I was born and raised. So seeing farmland as an investment, asset class, I saw my grandfather, my uncle, and then my dad, like they didn't own stocks and bonds, right? Like they owned dirt and they farmed it. But, for my dad now, he just uses it for cash rent, which is a little bit similar to kind of what the Acre Trader platform is. But I wanted to kick it off for those that maybe aren't familiar with Acre Trade. You want to give us kind of a quick rundown of who are you guys? What do you do? What's the offering? And what does it look like?
What you're talking about is pretty common. So that may have been 30 years ago that it was an 800 to 2,000 acre operation for a single person or family. And that was pretty common. And if you think about economies of scale in any industry, like things have gotten a lot bigger over the last 30 years. And so for somebody who wanted to continue their farming operation, it would be pretty difficult to go from 1,000 acres to 10,000 acres if you're going to carry all of that land on your balance sheet. But the tractors have gotten better, the technology's gotten better, people's operation and their business of operating farms is different than investing in farms. And they can have a lot larger operation, but capital can be a pretty big constraint on growing from, say, 1,000 acres to 10,000 acres, where 10,000 is not that uncommon of a farm operation for somebody in the Midwest, for say. And where Acre Trader comes in, we're an opportunity for farmers to access growth capital to grow their operation across more acres. And then we offer an opportunity for investors to passively add farmland to their investment portfolio. What does that mean? So I know that you guys work with a lot of investors and your listener base is very familiar with investing in stocks and bonds, and then alternatives is this kind of other bucket that you can add in to increase diversification and exposure to your portfolio. And farmland has been a very attractive investment for a very long time, but it's difficult to access. So your family is very familiar with it. But if you imagine somebody who didn't grow up around farmland, so say somebody who is in Chicago and their family's lived inside Chicago for the last 3 generations, thinking about investing in a farm in Indiana or buying a farm in Mississippi, where there's plenty of farmland, that's pretty difficult because they may not know the people there and they don't know how to operate it. And they don't know if they're getting a good deal. There's not a great source of truth or transparency in the marketplace. And frankly, a lot of those deals or those transactions happen off the market. It's a handshake deal. It's a neighboring farmer who's been driving by that piece of land for the last 20 years that ends up buying it whenever it comes up for sale. And so even though it has produced pretty attractive returns in terms of the appreciation and the yield or cash rent, it sounds like your father's doing now, it's been difficult to access. And then for a farmer, accessing capital, it may be driving to somebody in Chicago and having somebody that you're trying to work with to finance your operation, but it can be a difficult thing, and it's outside of operating a farm. And so we want to bridge that gap. We want to look for win-win opportunities on both sides. And the way the platform works is we have a team here who's working with farmers and evaluating hundreds of parcels of land each month as an investment opportunity. And usually once or twice a week, we'll have a new investment opportunity that comes up onto the platform. We've actually expanded into timber recently as well. And investors can choose which pieces of land that they want to invest in. We handle all of the management and operations. And instead of buying a farm for $1 million, we offer it as a syndication. So you can buy shares of each farm. And we may have 100 to 200 or 300 investors, depending on the size of the total capital raise. But you can, for $10,000 or $20,000 or $100,000, have exposure to these different pieces of land across the country, and not only diversify your portfolio into farmland, but across different types of farms in different geographies, and add some passive income, additional diversification to your portfolio. So that's kind of the high level of how we work with both farmers and investors.
Yeah, that is an excellent overview and explanation of the platform. And there's some things there that I will take away when I talk to others about Acre Trader a little bit better. And I've heard the story, right, like 3 years, and I'm still like, oh yeah, that's a really good point. That's a good way to explain it. But the idea of being able to, break it up in chunks, right? Most people are familiar with like an ETF or mutual fund. It's like, you almost can have that kind of exposure. We can put a little bit. Now there's still limitations where you're not like, hey, you put $50 in, like there is a little bit of a minimum investment there, but you are able to then own it. Can you talk a little bit about how the ownership of the farm is actually structured? Because I think that's interesting. And I get that question a lot. Like, okay, so own a fraction of this farm, but like, how do I own it? Right? Like who like how's that structure work? And then how's it taxed? Right? Like, what does that look like?
Yeah, people ask us that all the time. So do I own these 3 acres, or how do I know,
just the corner, Mike?
Right. How do I get the good part? The way it's actually structured is there's a special purpose vehicle, usually an LLC. So an entity that's created just to own this piece of land. That LLC will go under contract to purchase a farm. So it's a 200-acre farm. That entity is going to own the entire farm, and it will lease it out to a farmer usually to grow their operation. So that LLC will have income each year. And then there's different members or owners of that LLC. And so you could buy 5% of it, you could buy 50% of it, but everybody's a passive owner. And then each year, whenever there's distributions, you would get 5% or 50%, whatever proportion of the entity you own. And I'm not a tax professional, but the way that LLCs are typically taxed, it's taxed as a pass-through entity versus being taxed at the corporate level. So investors would get a K-1 each year, and it would have the entity made $1,000 and you own 10% of it, then it would show $100 of income on there.
Perfect. And real quick for clarification, the pass-through basically just means it ends on your personal taxes. Like you don't have a separate tax form, basically, for the novices out there.
Yeah, you can answer the tax questions.
Yeah, as the tax professional here, that's on set. Yeah, you nailed it. Anyway, sorry, Isaiah.
No, it's all right. I was just going to then kind of go into, we talked a little about it before, this idea of the different types of farmland. So you have what's considered like row crops, you have kind of more permanent crops, you have now timberland that you talked about, and then thinking about all those in kind of the breakdown, but then also how does someone, allocate? And that's like the question we're like, well, it depends, which I know financial advisors love that answer too, but we'll give you that cop out if it needs to be that way. But can you kind of describe what the different types are on the platform? And then how do people typically look at allocating across the platform? Do they say, hey, I want to find the best deal and I wait? Do they spread it out? And do you have any sort of insights or things that you've seen just from the various different investors that have been on the platform? Yeah.
So to kind of hit the higher part of what are the different types of offerings that we have, row crops is what we've started with. And it's like well over 95% of cropland. If farmland may include pasture land or grazing land, which I think it's like 600 million acres of in the United States. If you carve that out, over 95% of the farmland, the cropland, where they're growing either trees producing nuts or fruit, or row crops producing corn or cotton that's harvested annually, almost all of that is row crops. And the scenario there is that a farmer is planting and harvesting each year. And so you're not necessarily buying just a corn farm, you're buying a farm that's growing corn this year, but maybe it grows soybeans next year. And there's often a rotation there. Other areas may grow rice, soybeans, cotton, sorghum. There's all of the different crops that you can produce. And it's kind of like buying an option on any of the crop types that area or that, geography and soil type is able to produce. And so, this past year, there was a really big spike in wheat prices during the Russia invasion of Ukraine. And a lot of commodity prices went up, but wheat particularly. Well, farmers who had chosen to plant wheat that year were able to sell that for a higher amount. And other farmers decided to plant wheat the next year because it all of a sudden was more profitable. So it's less of a investment in a certain commodity, but more of an investment in that piece of land and all of the different options that you have to produce there. With permanent crops or orchards, vineyards, with these, you're more locked into whatever vine or tree that you plant on this piece of land. And if you wanted to change and say you planted red delicious apples and you wanted Honeycrisp apples now, like you would actually have to rip out the trees and plant new ones. So with that, there are more variables at play and you're a little bit more locked into a certain commodity, but those specialty crops can produce higher returns for investors. It's not as consistent. So Isaiah mentioned cash rent being the way that his family rents out this farm. So they may rent it out for $350 per acre. And regardless of, if it's a bumper crop or, the weather wasn't as great this year and the yields weren't as high, he's going to get $350 an acre. With a permanent crop or an orchard, you are more dependent on what's actually produced there. And that's going to vary quite dramatically if you compare a 2-year-old almond tree to a 17-year-old almond tree. The production schedule is pretty different. But with those, you do get some exposure to more specialty crops, and it's usually things that you're more familiar with, like avocados that you're going to see in a grocery store. And so investors there's almost like more of a connection with it. Like I understand this more because I go and buy pistachios on a regular basis. And so there's an interest. It adds diversification to a portfolio, even though it's a little bit different type of a typical farmland investment that people might think of. And then timberland, we added recently. We have a couple people who have joined the team that have a really strong background and track record in the space. It has a lot of similar attributes to both of those. You're investing in land, this store of value that's not going away, and it's growing something that will eventually be harvested and sold, but you have the optionality on when to harvest. And so you don't necessarily have income each year other than hunting or recreational income. You can choose when you want to harvest the trees and replant, or you can go through and select cut and really have an active timber management program that can provide some income to investors or some appreciation depending on the age of the stand of trees on that property.
We'll quiz you on the types of trees here. I'm just kidding.
Okay. Yeah, we may. It's almost always loblolly pine, which is the state tree of Arkansas, and is very, very common throughout the Southeast. Once you get up into the Northwest, you get a lot more hardwoods, and I can get the one of one, but I don't know if I can get all the mixed hardwood varieties.
So I have a question that I'm going to sort of preface with a story. But when I started dating my now wife, who was born and raised in California, and her parents were immigrants to California, pretty much all they knew about Indiana when we started dating was that they assumed pretty much the entire state was covered in corn farms, right? Mm-hmm. So they, for the longest time, thought I grew up on a farm, even though I grew up in basically about as suburbia as you get. And like the extent of my farming was maybe like a 3x5 garden, right? But with that, there's obviously a ton of farms, like, and a ton of row crop places, especially like even just like in just where we live, like, look at Isaiah's family and stuff in Indiana, and all the multitudes more when it comes to corn farms and corn acreage and row crop acreage in just Indiana, not even just the whole US. But like, if I'm a layman coming into an investment where, like, when I'm looking at the outside of their farmland, like, to me, a row crop looks like a row crop looks like a row crop. Like, how do you, as an, from like an analyst or like an investment perspective, look at a cornfield in multiple different locations and be like, oh yeah, this one's a good investment, this one's not? What are some of the factors that you guys look through to kind of come to these equations? Because I know you guys are very selective with the farmland you do end up putting on your platform. Kind of walk us through like what sort of creates those decisions.
Yeah, that's a great question. There's a lot that goes into the due diligence process, and also a great farm may not be a good investment, and a bad farm or a lower soil score, a less productive farm could be a fantastic investment. And it really comes down to value, like where are you purchasing that relative to the market and where you sell it, and then how much income does it produce during the time that you're holding it. And so value and quality are not necessarily locked in place there. When we're evaluating a farm, we want to understand the soil. Does this have productive soil for the type of crops that you want to grow there? And historic yields are a really good measure of that as well. Then you want to look at water access, and that's going to be very different depending on where you are in the country. So water access in a state like California is going to be different than a state like Illinois or Indiana. In Mississippi, there's a fantastic water table that is, or Arkansas, that is fed by the Mississippi River, the largest river in the country. It's called the Mississippi Alluvial Aquifer, but the soils are more sandy. And so you need wells to bring that water up so that you can irrigate the cropland there. But if you're up in Illinois or Indiana, the soils retain a lot more water. So in those areas, you're looking at drainage and making sure that you can get water off of the property, and it has sufficient rainfall to be able to, and retention to be able to usually grow a really strong crop without any irrigation. And then finally, you want to look at the farm community. Is there a strong tenant market? Are there areas that you can drop, are there grain elevators, areas that are cotton gins that you can deliver your crop to? And if it has a strong soil, water, and farm community, then it has the makings of what could potentially be a good investment. After that, you want to get to a good value. And to do that, you can look at comparable sales or historical sales and what is the value of a price per acre, given all of those nuances I just mentioned and many more in that area. And then you also want to understand how much you can rent the farm out for. And so if it can have a meaningful yield from the rent, and you think you're buying it at a good spot based on what your leading indicators would suggest for appreciation, that would usually be the high level of what goes into a diligence process. Now, that's really difficult because it's not a market that has a MLS like residential real estate. That's what feeds a lot of Zillow or other tools that you would use if you're evaluating a single family home, but there's not something like that for farmland. And even a neighboring farm is going to have a pretty different makeup if it has additional drainage in there, if it has a different slope than a neighboring farm. So 3-bedroom, 2-bath house, there are a lot of comparables, but there's a lot of nuance in evaluating a farm. And so we actually built a tool. It's called Acres, and anybody wants to try it out, it's called acres.co. You could find the diligence tool that we built, and most of the features we actually are giving away to people because we believe that more transparency and ease of access to the space is really important for this becoming a more mainstream asset class.
Very cool. We'll make sure that's in the show notes as well. And you mentioned one thing, income, price appreciation, and kind of buying things at value. Is there a good kind of rule of thumb or breakdown? And I know it's probably going to depend between row crops and permanent and timberland as well, of what the makeup is between those various different types of farms. Like, is it, hey, this is mainly income, this is price appreciation? Is there rules of thumb for different things? How do you guys approach that, or how do you try to educate investors on that?
Yeah, for a row crop farm, it would be typically a consistent, if you're renting this out to somebody, it would typically be a consistent but not incredibly high yielding asset. And that more of the returns have been generated from appreciation in row crop farms. For an orchard, like a permanent crop, that's going to be a little bit different based on when you're buying it. And so if you're buying a farm and investing in, building this out, planting all of the trees, putting in all of the irrigation and infrastructure for them, that's a pretty different investment thesis than buying an existing orchard that is already 15 years old because it's already producing. And so if you're starting this process and planting almond trees that have usually a 25-year peak productive life, and you're investing on year one, then you may not have any yields for the first 3 to 5 years while those trees reach their maturity. Then you may have higher yield, but you have this depreciating asset. So if it's 25 years left on the tree's life, you'll have a higher appreciation than if there's only 5 years remaining on the tree's life, because at the terminal value there, you have to usually pay about $1,000 per acre to pull all those trees out and replant and go through that lull of lower yields again. So it really, there's a lot of nuance there. I don't know if I'm explaining it incredibly well, but whenever those trees are in their peak productivity, it typically is a higher yielding but less consistent asset class. And because you have a depreciating asset working against you with that useful life of the tree or peak productive life of the tree, it hasn't been as much of an appreciation play.
Hey, we just ask questions and you get to answer them, and they're tough. So like, it's easy for us to throw questions at you and be like, hey, what about this? What about this? No, that's a good answer. I think it helps to think through it. And with the appreciation. So fun things that Josh and I talk about, and I'm sure you all talk about as well, is just like so much of valuations on everything, used cars, homes, it's all been skewed and borked, and, money is freer than free. So I would assume, right, that farmland deals are harder and harder to come by. Have you seen that those land values getting to the point where it's hard to use, like, previous sales, even if they were, 3 years ago or 2 years ago, just because of the fact of everything's getting bid up so high? Or has that not been as effective as maybe other asset classes or industries?
It is. I mean, we've certainly seen appreciation in the land market, especially over the last couple of years. And so if you're using a comparable sale from 2019, it's not going to be that useful then whenever you're evaluating a farm. And so a lot of times appraisals will come back based on historical comparable sales, which doesn't necessarily represent a true market value there. One of my colleagues went to a land investment conference, and it was a farmland focused event. And somebody asked, it was one of the lead speakers, they asked, how many people think that farmland is overvalued right now? And, some percentage of people raised their hands. And then he asked again, he said, keep your hand up if you'd want to sell me your farm right now. And there may be one person that kept their hand up. So we have seen appreciation, and there's actually been more sales, like more turnover of land over the last couple of years than any historical 2-year stretch that we can see. And so there has been an increase in transactions. Yes, the transactions have been at a higher price per acre than what we've seen historically, but that doesn't necessarily indicate that you're at a peak by any means. And we have this pretty large secular tailwind of the average age of a farmer is increasing. It's, I think, like 67 years old. And so there will be more, whether it's people handing that land down to a child or selling it, there will be likely more and more transactions within the land space. And not every single one of those will be a perfect fit for the Acre Trader platform, but we really do want to make this buying and selling of land to be a common and more transparent and easy process for people, because historically it's a very fragmented market without equal access to information. And so if we can provide more tools and transparency to the space, then hopefully, we make it a lot easier and better process for everybody who plays in there. And then we can build a big business as well.
Yeah. Have you guys sold a farm yet? So I know you've been at when was the first purchase? Was it 3 years ago? A little over 3 years ago? I'm trying to remember.
First
exactly.
purchase was in, I think it was April, maybe March of 2019 was when the first investment closed. And we purchased that farm. It was a farm in Arkansas that is still an actively managed farm that we have in our portfolio. We have actually sold 3 investments, and most of these are 5 to 10 year investment horizons. There are a few that were 3 to 5 year investment horizons early, and they were farms that we purchased. We added drainage tile, which is basically like in the Midwest, it's plastic piping that can pull water out from underneath the soil so that you don't flood the crops. And we made some other improvements to that particular farm, and then turned around and sold it. It was a pretty strong return for investors. It was about a 22% return. It was a row crop farm in California, and then another one in Iowa. 2 of those were 3 to 5 year hold periods that we had anticipated. And so we were kind of getting close to that window where we had made some improvements and investors were anticipating that they would have their capital returned. And then the others is, it's an estimated hold period of 5 to 10 years. But if somebody makes an offer to purchase a farm and we believe that it's at or above what we would assume that perceived market value would be, and we're able to outperform expectations for investors, and it's something that we have considered. So selling a investment where we had an estimated ownership duration of 5 to 10 years, but we're able to return a 22% for investors, it's certainly something that we're interested in.
Yeah.
Surprising investors to the upside. So we've got about 110 farms that have gone through the Acre Trader platform. Most of them will be actively managed for quite a few years, but we're excited about the early outcomes we've been able to realize for investors.
Absolutely. And then just trying to think about so I'm an investor, age-old, like the age-old kind of advice and guidance is I want more risk, I own more stocks. I want less risk, I own more bonds, which again, in 2022, we can all laugh and joke how that hasn't necessarily played out with rising interest rates, inflation, all these other fun things that are going on. When you talk to investors or the team talks to investors that are thinking about like, how do I allocate to farmland? Where do you think it fits? So if we use this, and we don't like 60-40, but we'll just use that because that's what everyone kind of always throws on the wall. It's like, hey, I have 60% stocks, 40% bonds. It's worked really well historically. How would you kind of walk someone through? And again, I know this is like the super easy question to ask, and it's always like the nuanced answer. So again, my job's easy. I make it hard for you. So take that however you want to think about how farmland fits.
That's exactly what you teed me up for.
I knew you would do it. So I just, you
got to call Isaiah. He'll help advise your personal situation. So I think that it depends on where they are in life and how quickly they would want access to those funds. It depends if they want more income and very predictable income, or if they want to be a little bit more risk on and but wait for 3 to 5 years before there's any income at all because they're planting and developing an orchard. And so it's really difficult to have a blanket answer with percentages. I think that you have to start with what is your ideal outcome and what is your personal situation, and then you can get to a little bit more of a ideal exposure to the asset class. So maybe
what about just talking about how it interacts? Because I think that's a very fair and true answer. How does farmland, react or mix or complement, I guess, stocks and bonds? Maybe that's a better way to approach it. And this can be both permanent row, timberland, all that stuff. So I think that's an interesting area to go into.
That's good. And with you mentioned the 60-40 stocks and bonds, and people like to balance there because typically if one goes up, the other goes the other way, or there's just this lack of correlation, but they've been more in lockstep throughout 2022. And so a lot of investors are asking, how do I get that diversification if where I thought I was capturing that isn't necessarily working as well as I had anticipated? And with that, farmland or other alternative investments can enter into the space. Farmland has had a negative 0.03 correlation with the S&P 500, so the broader stock market, and still produced positive returns for the last 30 years each year with that combination of both appreciation and yield. That's a figure from it's the National Council for Real Estate Investment Fiduciaries, but they have a farmland index where they track a number of different funds and players in the market. And so with the consistent positive returns, and they've been pretty meaningful, about an average of 11% annually for that same time period, and having that lack of correlation with the market, it's been a pretty favorable addition to a portfolio. With that said, in the stock market, you can buy and sell every day. You can't day trade farmland. The way that we have these structured, it's under Rule 506C of Regulation D. It's a securities exemption. And if you invest in this offering, then there is a holding period of 1 year where you can't sell your shares, and then it's still a private placement offering. So there's not a secondary marketplace the same way that there's some liquidity during the holding period, but it's not the same as going out into the stock market where there's a daily liquidity option on there. So that would be if somebody's asking for like, okay, this can't be perfect. This can't be just like a silver bullet for an investment portfolio. That is something that we talk to investors about, is like, it's not a trade. It's a longer term investment, but it has had some pretty unique characteristics. And because farmland isn't so liquid, it's not traded on a daily basis, that has helped with the consistency, or if you look at a farmland index chart compared to something that does have daily liquidity, usually there's a little bit more consistent and smoother outcome for investors because it's not traded on such a frequent basis.
Yeah, you don't give them the easy button to click sell or buy when they feel like they need something. And
yeah.
I think, the biggest thing that when we kind of talk and walk through how does farmland fit with clients and just people in general is, it is illiquid. So you need to make sure you have access in other places. That way, if, something happens, you can access it. But shoot, if you look at the return expectations for most markets, whether it's fixed income, whether it is, stocks, it's not great. And you look at farmland and the future returns on that are pretty, in line with historical, but also like these are things that are not going away. It's not getting disrupted. Like people are still going to eat. If you don't think that happens, then okay, maybe farmland's not a good place to put money, but it is really resilient. And that's one thing that was interesting to kind of dig into the history as well of like, when has farmland not done well? And when I looked at it, it was when there was a lot of leverage used in, I think it was 70s. Is that right, Mike? 70s and 80s?
Yeah, 70s, early 80s. There's I think it's like a PBS documentary that talks about this, but there's a lot more leverage used in the space. And so it did have a run up on farmland values. Leverage is used much less in farmland now. And when it is used, it's typically not high loan to value ratios. And so the whole industry kind of pulled back and hasn't been as debt happy since that.
You touch the stove, you get burned. You're like, nah, we're good on that for a bit. And that's one big difference too. And this is something that maybe you want to touch on or talk about, like when you think about commercial real estate versus farmland, right? Because commercial real estate is typically using much more leverage to generate those returns versus farmland.
I'm never making an argument against other asset classes. There's certainly reasons to invest in other asset classes as well. But if your returns are that leveraged and you have your investment strategy is to go into highly leveraged real estate, that market kind of changed recently as well as rates went up, because then you've got either lower appreciation expectations because you don't have as highly leveraged offerings, or your yields are paying down debt, paying your principal and interest payment rather than being distributed to investors. And so you are more rate dependent in that environment as well. If you don't think people are going to eat, then I don't know what your investment philosophy is, but there's some pretty intuitive just supply and demand factors that are in your favor for investing in farmland. And what we really try to drive home is not necessarily like this is how you get the maximum return, but it's also a wealth preservation tool. The idea of many other asset classes really losing a lot of their value is, some are more stable than others, but you can come up with a scenario where any company goes out of business. Like you can play that out. But the idea of 80 acres of land all of a sudden being worth zero is pretty difficult to fathom. Like there are things that, every investment has risks and there are things that can go wrong, but at a pretty intuitive level, it's difficult to understand that scenario. And you also have a shrinking number of acres that are in productivity, and that's primarily due to real estate development. And so if you have the shrinking supply of acres that are in production, a growing demand for the fuel and food and fibers that are grown on all of these, then there's a macroeconomic equation that really is in favor for farmland. And again, it likely won't be the highest yielding investment in someone's portfolio every year, but from a wealth preservation perspective, it can be a pretty strong addition for a portfolio.
You're making the case for the Bitcoin farmland portfolio.
Well, Mike, you also mentioned that too. A lot of the farmers are like wasn't that? Did you say the average age was like 67 or something like that?
Right.
Yeah. So, I mean, too, you're going to probably have just farmland disappearing, not just from real estate development, from it not getting passed down or next generation deciding, we don't want to farm.
Right. Yeah. In those scenarios, we can actually be a pretty good solution on the farming side. So a lot of times that situation is happening and a neighboring farmer hears about it. My neighbor's ready to retire. His children don't want to take over the farm, and he's likely going to sell it in 2 or 3 months. I would love to add those 400 acres to my operation, but I don't have the, say, $4 million to purchase it right now. So they can call Rob, who works at Acre Trader, and they look at that offering and he says, I'll introduce you to the seller. It's not listed right now, but I'll introduce you to him. I want to rent it from you so I can add this to my operation. This can help with my economies of scale. I've got my whole farm operation set up right here. And then that farmer gets to expand their operation. We have a seamless purchase process. We can close pretty quickly, and it's a good experience for the seller. His neighbor who he wants to farm it is able to expand their operation and be on the farm, and then investors have access to that opportunity as well. So we really look for as many of those opportunities as possible, and can kind of insert ourselves and hopefully add value on all sides.
Out of curiosity, I know you mentioned this earlier too, from like the supply demand perspective, you mentioned like the wheat situation with the Russia-Ukraine war. I mean, there's been at least like rumors and speculation around droughts over the past like week or two, but also, fertilizer yields and stuff from the Ukraine war and stuff too. Like, are you guys seeing that going to be having any sort of impact or, long-term implications in terms of like farmland as an investment?
That would be more of a farm operations situation than a farmland situation. So it may decrease if they don't apply as much fertilizer. It may decrease yields on a given year, or it may increase their costs, and so it may not be as profitable. If you look at the commodity trends, like whatever they're growing there, those have been increasing as well. And so, yes, their costs are increasing, but top line revenue has been growing for most farm operators as well. And so I don't know that I can comment on the farm operations economics as much as I can the investment value, but that's, again, it's a little bit of an ancillary driver of the return profile than a key driver for the actual farmland investment. One way where investors have been able to have some exposure to operation of those is a flex lease. So say the average rent or typical rent for a farm is $300. Maybe you start at like a $275 or $280 per acre, and you set a floor for what the cash rent would be paid. So the farmer gets to lock in a little bit lower price per acre if it's not a great year. However, you as an investor have some upside potential. So if commodities go up or if yields are really high, you have some percentage of the upside of what is actually produced on the farm. And you can measure the yield by combine tickets, by grain elevators. There's a number of ways to have this be common or to actually know what the yields and the revenue is. And you as an investor get to participate in the upside as well. So there are ways to have some more exposure to a farm operation with just a straight cash rent. You don't typically have as much of that.
Gotcha. Yeah. And what I guess I was getting at too, from like the valuation standpoint, was just, I know you mentioned crop yields kind of being an ancillary part of how it's valued, not quite 100%, one-to-one, but more of like, do you think like we'll start seeing more values in farmland, like from like a purchasing standpoint, because of kind of what we're seeing now as like just kind of the lay of the land, I guess, if you, for no pun intended, for the just what's going on with like crops in general? Like, do you think that's going to open up more opportunities for investment, or do you think it's going to be pretty much just status quo because there's always these variables?
That one's tough because, again, like you have more revenue being produced in the space as costs are rising. It'll be interesting. Usually there's land transactions going on at any point throughout the year, but in November, December, when you understand how much revenue you have from all of your crops that you produced last year, if you're a farmer and you're also planning what fields are going to be planted next year with what crops, you're doing a lot of your annual planning because there's not as much growing or harvesting in November, December. And so it'll be interesting at that point to see how people, how the year has actually treated them, like what the impacts are of the rising costs and rising yields, and how people end up at the end of the year and what decisions they make.
Yeah, I think it's going to be super interesting, but didn't know if you kind of had any hints already of where that was trending, but I was just more of a passing curiosity, I'd say, than anything.
Yeah, I've just been hogging all the questions over here, so I'm glad you got to ask them, John.
Yeah, how dare you, Isaiah? How dare you?
This is my episode. I get to ask the questions. No, but one of the things you talked about of just like the farmer wanting to buy the neighbor that's going to retire. I mean, we've talked about that in our family. So I have 4 other siblings. My parents want to say, hey, this is your inheritance. This is farmland. I don't know if everyone's going to want to own it. And it's like, okay, does one of us have the capital to buy out the other one for this amount of land? And like, what's the value at that point? What does it look like? And does someone want a chunk versus I want the income over the years? And I think that there'll be a lot more of that for Acre Trader to be able to have conversations and help with. So I think that's interesting.
That's a really difficult thing for a lot of families because it's something that like land is emotional as well. And it's something where you could have 8 different people who have some percentage ownership, and one person wants to farm it. Two people are like, let's sell this as quick as we can. And some may not care, and some may want to hold on to it forever. And so those are really difficult situations. And yeah, it's not
family
uncommon.
and money being tricky. What? Yeah, I've never heard that before. So one of the biggest landowners in the United States, at least, has been Bill Gates. He's been buying tons of farmland. Has that come up in conversations where people have been interested based on what they read? And is Bill calling you guys to try to get some exits and buy some of the farmlands that you guys have you've acquired, or no? Is that something you can't share on the podcast yet?
We there's no relationship there. I think that there have certainly been headlines. I think it's like 250,000 acres of cropland.
Insane amount of
and I think that has prompted a lot of calls. There was something that came out recently about Michael Burry, who's the Big Short, his play on water and land with access to water being a strong investment or a big part of his current investment portfolio. And those do, I think, drive a lot of individual investors to think like, okay, I don't have a family office, or I don't have a giant investment portfolio where I could go deploy $100 million into farmland and actually have a diversified exposure or access to the asset class. But I would like to own some. Like, I understand the reason that these very wealthy investors are participating in the space. And so that does come up pretty frequently on calls of like, well, I read that article and then I Googled it and I found you, and this seems like exactly what I'm looking for. Like, it's passive. I don't have to hire a team to manage it. And the entry point is a lot more approachable than, going out and buying a dozen farms across the country.
Along the lines, like from an accessibility standpoint, like I know right now you essentially have to be, what's considered a accredited investor, like the, the $1 million benchmark type thing. Do you see a world where that's going to get more and more democratized over time, and farmland's going to be more and more accessible to, people that are not accredited investors?
Yeah, and I would certainly like it too. I think where we are now, so as Josh mentioned, it's accredited investors. That's a Reg D, this rule that we list these private placements under. You have to be an accredited investor, which is over 200,000 in annual income for the last couple of years, or 300,000 joint income for the last couple of years, or over $1 million net worth. Or if you have some certain securities licenses, then you can just use your license number to become accredited. There's a couple other ways that someone can be accredited, but those are the primary ways that somebody gets approved. And one, it's an easier and more cost-effective way to open up a private placement. So that's one element, is like we wouldn't have to charge a lot more to investors if we had done it that way. And then also, if you think about the service and the education that we want to provide to investors, if it was open to everybody and you're investing at $100 per share, one, we wouldn't be able to provide that education in this brand new asset class because just the staffing, like we wouldn't be able to service that many investors. And that's a pretty big hurdle, as this is a brand new type of investment for so many people. We would, as those education materials and the website continues to be more and more intuitive, and you don't necessarily have to interact with somebody, and you can learn about the asset class and how it works on there. I do think that's something that we could hopefully move into. It's not something on the immediate horizon, though, unfortunately.
Again, passing curiosity.
Yeah, we'll get there.
Yeah, exactly. And I know, like, regulations around that are a huge hurdle. Just to begin with, like you mentioned, cost effectiveness and just the regulation burdens in terms of compliance and all that stuff. Us in the finance space fully understand that, but yeah, it's one of those things that is just it's a beast with any type of private development or dealing with the general public.
And if it's under Regulation D, you can actually send out marketing materials, like do a general solicitation. And so as we've been growing the company, and marketing and getting that exposure has been pretty important. If it's under the other regulations where you're open to all investors, then there's a lot more limitations around the marketing that you can do. And so I don't know, there's a lot of trade-offs, and I know there's intention behind each one of these rules, but if we weren't able to market them and get eyeballs on them, then it could be a little bit difficult as well.
We know that difficulty all too well.
Yeah, accreditation rules make zero sense. Someone's money they should be able to put it where they want. Right. End of story. If I have money and I want to invest with you, it shouldn't matter, or make it something where I sign off and waive it. It just, to me, it's a hurdle to prevent certain things, and it's goofy, but such is life, and such is is regulation in general.
Like we have to verify that someone actually is accredited whenever they're going through. You can't just take someone's word for it. And so that isn't always the most user-friendly experience where somebody wants to invest, even like a pretty large allocation. They're like, if I'm investing $500,000 in this offering, well, do you really not think that
I probably have $1 million? Yeah.
Right there. I have to show you I have to verify this. And so would I choose to? Probably not. I think the intention behind it is with private placement offerings, there's not necessarily the daily liquidity we talked about. There's not always as much information for a private investment as you would have for all of the mandatory disclosures for a public offering. And so they want somebody to be able to be sophisticated and have the liquidity to be able to stomach, less liquid investments. But yeah, the way that it is regulated in the way
we won't get you in trouble. We'll stop there. We won't keep. Yeah. Mike's gonna get a text.
What other opinions?
You got to stop. Yeah. Phone call. Hey, you can't say that stuff, Mike. Come on. So as we kind of wind down, what's your favorite kind of story within Acre Trader? Whether it's a conversation, a farm deal, like, is there anything? And it can even be with your coworkers, just something cool. Is there anything that's top of mind that you want to share?
There's a few that come to mind, like farm visits and the way that we've been able to help facilitate some of those generational transfers of land that you mentioned, where farmers who want to own this actually invest in entities on our platform and are the farmer as well. So they're kind of on both sides of it. But one that it's pretty short and simple, but I talked to this investor, his name's Dave, and he said, wow, like this is a really big deal for me. We had farmland in my family and my father actually sold it when I was in 8th grade. And so this is the first time that I've been a farmland investor, a farmland owner since I was like 13. And I was trying to tell my wife like how this was a really big deal for us. Like we're farmland owners again. And it was almost this like emotional appeal as well. Like he did it because it was an investment that he wanted to make and put his money into. But there's so many securities or investments that people can make where it's really difficult to understand what the underlying value is or what's there. And like land really is a meaningful, real thing that like people do have connections and stories and emotions tied to. And it's cool to be able to offer that to people and connect with them on that.
Very cool. Last question. And if we need to edit this out, we will. I'm just kidding. We're just warming up. But do you have a question for Josh or I? Anything that you want to ask us and kind of what we do? And, as a thank you for coming onto the podcast and kind of going through this, always want to open it up and see if there's any questions or things that you want to kind of just ask us. That would be interesting.
I mean, to your point, like most of the investors that have been on the platform have been retail investors. That's kind of how we built it. And we hope that we can do more advisor products in the future because a lot of people aren't at the wheel for their investments right now, or they have somebody like you that they're working with. I'm curious, you found us pretty early and have been really engaged with it. What about Farmland has been interesting for you and why have you been so engaged with the product and platform?
I think I'm probably a little bit like Dave, candidly, right? Like it's been in my family and I've seen that work, and it's going back to the idea of the way that we talk about investing. It's like, okay, if it's the ingredients, right? Like this recipe has all these different ingredients. Farmland is one of those. And if you can add that in, it builds on investor behavior. So if you can't click the sell button when you get scared or something happens and you can actually kind of forced in a way to hold it, you'll actually see the returns that you want to see. It's good income in a world of low interest rates. I know you probably hear that all the time. And yeah, it solves, I think, some needs for clients that they don't want more stock market exposure. And they're like, how do I go get real returns in a world where it's challenging at the moment? And Farmland plays into the, hey, if you see inflation, guess what? Land value is going to go up. Okay. That also means that yields will rise too. And I just think there's a lot of things that fit well with farmland investing. And I think I'm naturally kind of partial to it, but no, I think I heard Carter, who is the CEO, Carter Malloy, on Meb Faber's podcast, because I used to religiously listen to Meb all the time. I don't as much anymore, even though I met Meb last year, which was kind of cool at the event. So we got to chat at like a cocktail hour for probably like 30 minutes, which is really cool. Right. And he's such a nice guy. I learned a ton from him and his team and his podcast, just interesting guests. And so when Carter was on there and talking about it, I'm like, oh, this makes a ton of sense. And I told my parents and they're like, oh, that's interesting. Like Interesting. And so I think they went to the website and just looked at, just because they were like, there's a platform like this, huh? And I was like, yeah, it's kind of neat. And again, I think most investors, if they know about it, going back to the marketing and awareness, they're going to say, yeah, this makes a lot of sense. I want that. I think from our perspective and from our team, it's a conversation that we like to have, and, for the right person. And again, it depends, right? Like if it fits for everyone, but when it does, I think most people have been really, really happy, and it's been fun to see that. And it'll be interesting. Again, the reason I ask on the exits, we haven't had any clients yet that have owned something that has exited, but we know, when that happens and when that starts rolling off, there's going to be certain times where, how do we redeploy that capital? Is it into the next deal? Is it somewhere else? Do they use it? And I think that'll be really interesting for us as we continue down the path. So it's a good question. Yeah. Josh, what do you think?
Yeah. I mean, for me, like obviously it was from a different background where it wasn't the nostalgia that, sort of attracted me to the farmland. And actually, frankly, I hadn't really even considered it until meeting Isaiah and having conversations with Isaiah. But my sort of investment thesis all along has been, consistency trumps intensity every day of the week. And, building wealth is not about having 50% returns on tech stocks or whatever. It's all right. How can you do this consistently? Like, I don't know if you've ever seen the scene from Moneyball of like, he gets on base. Like, that's all you need to do. You get on base, we win. Get on base. And that was kind of like been my investment philosophy from, day one, is like, okay, well, how do we minimize losses? How do we get just good, consistent compounding? And then, so we started diving into farmland, and I was like, okay, well, our other, stock, what we do on our stocks and bonds, like, we're working on, minimizing losses and stuff there. But, farmland kind of does the sustainability of investing, like you already mentioned, with just a lot of the supply and demand factors, just inherently as an asset class. Like, it is just protected from, pretty steep drawdowns, again, if you're not using leverage, because populations are continuing to increase. People are still pumping out babies, farmland's shrinking, people farming it is shrinking, weather's changing, all these different things, like where the supply and demand factors just work in your favor to make it a very consistent, sustainable investment that complements a lot of the other things that, people are doing. And to me, it just becomes a no-brainer. Even looking at it as like an investment, just in and of itself, without any nostalgia or anything like that. Just if the goal is to build wealth and keep it, like, why not?
You can clip that for your next marketing. We'll just give you the end of this podcast.
Yeah, that was awesome.
It is. You guys do a great job at, I think, the education piece, which is something that we're passionate about as well. Part of this podcast, part of the stuff that we do, it's like, you just want to inform people. At the end of the day, it's their money. They're going to make the decisions. And if you can help them understand something better and say, hey, here's a solution to this problem, they'll find their way to you. So yeah, Mike, thank you so much for coming on. This was great. This was a ton of fun. We look forward to continuing to monitor the progress of Acre Trader and the deals that you guys have on the platform. So appreciate it.
Yeah, thanks for having me. This was fun, guys.
Ditto.